All right, very, very quick. Once I get to the questions session, you guys can ask your questions. You can unmute yourself. But for now, let me just explain this flip zone. I posted something in the group today concerning the flip zone about a valid flip zone and a flip zone that's not valid. Okay, I said something like this. Say something like this. A high, right? Before a flip zone is valid, make sure it sweeps a low first. Make sure this first leg sweeps a low. Then if this one sweeps a low and it goes back up to react like this a little bit before breaking structure, this is the valid flip zone. This is valid flip zone because we had that sweep of liquidity down here, that sweep of a low right here. We had it, right? Then we had this other block right here. Then price coming back to react, and then you buy up from here. This is a valid sweep, a valid flip, sorry, because there's a sweep of a low right here before that reaction. Okay? But a flip that is not valid, this is it. Look at it. A high and a low. Then you see something like this, and it breaks structure, right? Now, it doesn't mean that it won't play out. Sometimes it will play out. Sometimes. So we'll just regard this as a low probability flip. There's a difference between a high probability flip. This is a high probability. This one right here. This is a high probability flip. While this one is a low probability because it didn't sweep a low, right? Although it gave that reaction and failed. It gave that flip. In cases like this, is where you see price just come to react on this a little bit, then fails it, then use this main order block right here instead, then buy out from here immediately, right? That's how it is. Hold on, guys. Hold on, I'm coming. Sorry, guys. So let's continue. This is a flip zone, right? So most of the time it will work. Sometimes it will work. It will play out. And most of the time it won't play out. It will just take out this, use this as like inducement and use this main order block here instead, right? But our main focus is this flip. If you check very well, this is the only trade that we have been taking, but since this week. Throughout this week, this has been the only trade we are taking. A sweep, then a reaction, a fail, right? That's why our win rate this week was decent, okay? But if you had mix everything together, if you had to say, okay, let me just take a random flip zone on the chart, and you see any flip zone, you just take it, you reach stop loss, all right? It will reduce your win rate and it will affect you psychologically. That's why you have to stick to the A plus setup only. This week, I just stick to the A plus setups only. I'm patient. You wouldn't just see me going on the chat trying to force trade, looking for where is flip zone. Okay, look at flip zone here, let me take it. I'm trying to force it. No, I won't force it. Okay? That's why I tell you guys, always stick to A plus setups only. If you have to stick to these B plus setups, sometimes it will work out, sometimes it will fail. Okay, and we don't want to fail in trading. So that's just it for this what I posted today because you were asking question for ease. So this is it. So for gold, I posted a buy here. I posted this buy on gold using the Quasimodo. I think it's this buy, the sweep of a low here as a Quasimodo. Then we have this B leg. We have this B leg right here. Then we have this place that we are supposed to buy it from. Put a stop below and target this high or above it. Right, that is 6R. But now the reason why it bought from here, that is what I don't know. So let's head over to the 5 minute and see the reason why it bought from there. Now it should be this flip zone here. This tiny flip zone. Remember, I posted this in for you guys in the group. This was the flip zone it came to react from. It came to react from this flip zone right here. It didn't use the Quasimodo anymore at this point. It just used the flip zone. Although this is not how you should trade. I'm just telling you guys the reason why our limit wasn't triggered. The reason why I didn't buy from here is because of this flip zone. Okay, you can see it's a valid flip zone. Why? First of all, we have that sweep of a low right here, right? Then price came back because once it sweeps this low, you will not be interested in this leg. This whole leg is what you'll be interested in, right? So we have this first order block here, we have this second order block here. Although this extreme order block didn't give any reaction, but this one here gave a reaction. So you have to buy from this one instead. You can see it, right? So that was why gold just bought. And if you had seen this, try to reach the trade, would have caught enough pips here. So you can see flip zone is very, very strong. It's moving the market in massive moves. So I don't think there's anything else to break down because this week has been good so far. But you can ask your questions now. You can ask your questions now. Mute yourself.
My question is, you said you want to find the yourself is
I
how
can't hear
can
you. I can't hear you. Your voice is low.
how about for this?
I still can't hear you. Maybe are you connected to Bluetooth or something?
Yes,
Okay, I can't hear
because
you. Is this Faiz?
no,
Hold on. Okay, success. Who is success? Who is success? Success. What is your name?
Olua,
Okay, Ife Olua, right?
Olua.
Okay. All right, so you can ask your question. But since I can't hear you, just type it in the group. So I'll read it now. Type your question in the group so I can read it. Then Faiz, you were asking question. These are questions are much. Oh. It will take the whole session, sir. Okay, how to correctly refine a flip setup. Okay, now on the BTC trade I sent today, I don't even know if it has hit stop loss or profit, sir. I just left it. On the BTC trade I sent today, let's head over to the 1 hour. Uh, what's happening now? 4 hours. Hey, glow, you're messing up. Hope you guys can hear me because my network is kind of slow now. Can you
Yes, we
guys
can
hear me?
hear you.
Okay. So
Yes.
this was how I refined BTC setup. So now, first of all, we had that sweep, right? Right here. We had that sweep. Oh my God. My network is bad. Oh, I'm coming. Are you guys still active? Can you hear me now? All right.
Yes, boss.
Okay. So this was the other block. We got that reaction. So now you want to refine your entry, right? So first of all, you mark this other block. This is the only other block there. You mark it out. Although some people want to take the trade from here, right? From here, this other block, and want to put their stop loss below. And this is just giving 2 or 3 R. Can you imagine? It's not a good risk to reward ratio at all. That's why I want you guys to refine it. Refining your order block gives you advantage, like giving you a higher risk to reward ratio, and it also gives you enough space for your stop loss. So in case price will just sweep a low and buy again, like what happened in GBP JPY. Exactly what happened in GBP JPY. It swept a low and bought. So that is what I was explaining for you guys now. How to refine the entry. Eh, oh, okay. So now let me mark that other block again. So this is the 4 hours time frame. We are heading over to the 1 hour. Remember, you move from time frame to time frame. Don't jump from 4 hours to 1 minute. Please, you're not the market maker. From 4 hours, we are going over to 1 hour. From the 1 hour now, we'll head over to 15 minutes or 30 minutes. That's how we do gradually, refining the other blocks. All right. So the 1 hour now, we have this other block right here. Let me mark it out. This one. And how to mark out the correct other block? Look for other block with imbalance. Let me remove this. When I say imbalance, you know what imbalance means? Fair value gap. This is a fair value gap. Only mark out the ones with fair value gaps because price will always come back to fill in those gaps and mitigate the block close to it, right? So that's how we are going to do. This is 1 hour. Now we head over to the 15 minutes. Just pray this load so not slow as okay, one connection. Ah, sorry about this. Next time I'm going to make sure our network is good so that we won't have this issue again. uh, this is bad. This is not. Sorry, guys. Okay. Okay. So now you're back. Now, how to refine it at this point? Now, at this point here, if you want to refine that same 15 minutes order block, sorry, the 1 hour order block, how are we going to refine it? Is this one of fair value gap right here? You can see this fair value gap is where we'll be taking our buy from now. So I'll mark out this fair value gap here. This one, this other block, sorry, just after that gap. Can you see it? That will be our next order block now, where we'll be taking the buys from. This is where we'll be taking it. This is where we'll be taking it from. This one is okay. You don't need to go back to the 5 minutes again. This is okay, right? So you put your, whatever I want to put here. Then you trail your stop loss a little bit below. Probably just give it a breathing space here, right? Give it breathing space like this. Then you target that high. Target that high. That the same high we targeted on the high time frame that gave us 3R. Look at it, it's giving us 8R now. 8 risk to reward. So if you are risking $100, you're making 800 at this point here. Can you see it? So that's how we refine our order block and give it breathing space. Breathing space, the reason why I say to give it breathing space, like I said, price sometimes may come down like this. Sweep this low. It will just sweep it a little bit, then buy again. That's why you need that breathing space. Okay? That's why you need it. So this is how you refine your order block. This is how you refine it. Any flip zone you have, any flip zone you have at all, any flip zone, okay, let's first of all, you wait for a sweep of a high. Let's say this is it. A sweep of a high, comes back down, reacts and break the low, right? So now I want to be selling off from here. But before you sell off, your refined order block must have been at this point. Normally, this would have been your order block, right? But because you refined it, your order block will now be here. So price tends to go to the lower time frame order block and give you sniper entry from there. Just go down. That's how you see me catching all the sniper entries. You guys are even doing it too, so you know how to do it. This is how you refine your entries. So that's that for that. Nothing much. Nothing much. Let's head over to the next question. Success, I've not seen your question, or have you?
My question is, you said we should stick to higher time frame flip zones. But
Yes.
at times I do, but at times I see people still using 15-minute flip zones. Like, is it advisable to stick to it?
No, it's not advisable, and I'm speaking from experience. I've tried using the 5 minute, 15-minute flip zones before. It's like 50-50%. It will work 50-50. That's just it. Because you might make $1,000 now from a flip zone, and you will lose $1,000 on the next flip zone. That's why I say you guys should stick to the high time frame, because the truth is, the higher your time frame, the higher the probability of your trade. That's why I stick to the high time frame trade only. But As I stick to the high time frame setups, you see me refining my zones down to the 15 minutes or 5 minutes. I refine my entries there. Okay, which this alone gives me a good win rate because I'm sticking to the high time frame bias, then I'm entering the trade on the lower time frame. You understand? That's why I advise you guys to stick to the 30 minutes, 1 hour. 30 minutes above is okay. You can just stick to the 30 minutes if you want. 30 minutes works well. Okay. So
And
that's why I tell you
another
guys.
another another question is uh, the difference between ABC pattern and Quasimodo and how to identify them on charts. I still find it difficult to identify.
Okay. Okay. Here's the difference. This is the difference. ABC pattern is like this. A, B, C, right? Price tends to take out this B leg, to take out the B leg and buy from there. This is ABC pattern. Oh, sorry about this. This is ABC pattern. Uh, right. This leg here is a B leg liquidity, right? Why Quasimodo? Quasimodo is like this. Quasimodo is like it's the same thing with ABC pattern, but a higher probability ABC pattern. Okay, and it's like this. It usually comes with a sweep of a low. You see something like a low forms like this, and price sweeps this low. Once it sweeps the low, it goes high, creating a B leg, it goes higher again. Now this is a high probability ABC pattern, and you don't want to call it high probability ABC pattern. Instead, they just call this Quasimodo pattern. So now price tends to take out this B leg, then react from the other block here, then buy again. This is the difference. Quasimodo has a
Can't hear
flip.
you.
Quasimodo has a sweep, while ABC pattern doesn't have. Can you guys hear me now? I'm having issue this network.
Yes,
Oh, but you can see my screen, right? I used to see my screen. You can still see my screen, right?
no, you can't see your screen.
Okay. We are here.
It's not showing yet.
How about now?
It's showing now.
Sure now. Okay. So
Yeah.
let's continue. Let's not waste time as this thing is cutting like this. So this is the difference between the ABC pattern and Quasimodo. ABC pattern, ABC pattern. Oh, ABC pattern has no flip, no sweep. Sorry, there's no sweep of liquidity there. It's just a random A, B, C. Price comes to take out the second leg. Some smart money traders will be buying from here. They will think this is the next order block to buy from, not knowing this is liquidity. It's going to take out this low. Sometimes it just come to sweep this low and buy, just to take out early buyers. But sometimes it will take out this low, mitigate from the next order block and buy from there. Bypass model, following a sweep, you usually see price buying from the sweep itself rather than the other block below here. That's why I advise you to use this one. Everything is pattern. Everything you are seeing is a pattern, structural pattern. Okay, this is a structural low, the B leg liquidity. Then price usually buy from this other leg here, and boom, you're buying. That's how it works. So this is the difference, and I'm sure it should be clear now. Do you understand now?
Please come again. We can't hear you from the beginning.
You can't hear me, right? Oh God.
Like from the beginning, we couldn't hear what you were saying.
Okay. I said, let me even remove this one. I'll start all over again so that you can understand. This is ABC. Hey, God, oh, see, you know what? You can see my network is having issue now. My network is having issue. I won't be able to enjoy this. I won't be able to enjoy this. Don't know, all of a sudden. You know what will happen? Can we move this to tomorrow? Huh? Can you guys hear me? Can you hear me? Let's do this meeting tomorrow because this network is
Okay.
bad now. The network is bad now. Tomorrow we'll do it. Tomorrow we'll do it. Let me just cancel this. Don't worry, you still keep your questions. I will answer them tomorrow. Keep your questions. I will answer them. How do I even end this meeting, sir? Imagine. I think stop share. All right. So I'll see you guys tomorrow, okay? I'll see you guys tomorrow. Let's leave this for now. All right. Can you hear me? You can hear me, right? So we'll do
Yes.
this tomorrow. We'll do this tomorrow. Sorry for the inconvenience. Was unexpected. I didn't expect it at all. So we just do this tomorrow. All right. Thank you for understanding. What's this?